Wall Street stocks posted their worst weekly loss in more than 2 years. The Dow Industrials plunged 300 points on Friday and lost more than 700 points for the week. That's due in large part to the collapse of oil prices. The price of crude fell below $59 a barrel on Friday, a drop of 47% since June. AAA says that decline has pushed the price of gasoline down to an average of just $2.60 a gallon nationwide. That's the lowest since 2009. Experts say it could fall further by Christmas. So what's going on? Tom Kloza is global head of energy analysis at the Oil Price Information Service. Tom, good morning.
Good morning.
This drop has been just relentless, and there doesn't seem to be a bottom, at least yet. What is fundamentally driving this down?
Well, it's the fundamental of too much supply and a little bit of a slowdown in demand in emerging countries. But it's really about supply, and it's about perhaps what we could be witnessing, the dissolution of OPEC. OPEC continues to produce as much as it can produce, and they show no signs of exerting any discipline on any of their members or non-OPEC members. And meanwhile, the U.S. is going to soon be producing more oil than we have since Richard Nixon was president.
I mean, you talk about OPEC, and I think a lot of people right now are thinking, they're supposed to represent something like 15 members. And right now it feels like they're only representing one. A lot of people saying that the scales have tipped. And what good is this cartel at this point?
Well, Saudi Arabia has always been the Michael Jordan of OPEC.
Right.
And they and a couple Arab Gulf countries are tired of basically making the sacrifices for the other members who pump what they want. Now, there's also the notion that they may want to punish Iran in the region, or they want to punish the Soviets, or Russia for meddling in the region. There's another theory that says they want to put the oil shale production boom to a little bit of a rest, but you really can't get inside the Saudi psyche right now, but they're producing a lot of oil.
The theory there is that if they drive the price down, I mean, the Russians supposedly need like $85 a barrel to be profitable in oil, and there's a lot of question about at what point shale becomes cost effective. Some say it's like $60 a barrel. You know, this price is going to hurt a lot of countries.
Yeah, it's going to hurt a lot of countries. Venezuela probably needs $140 to basically balance its social program. So they're in deep, deep trouble right now. The United States is okay. We'll see production rise next year, even if the price goes down to $40, because these are projects that were launched years ago. Ultimately, it could hurt the shale boom here if prices stay where they are or lower. But I think somewhere along the line we'll find a point of stasis and bounce back a little bit.
I mean, we're sort of the beneficiary of all that strife, though, because the prices right now are really incredible. And you have some good predictions what people can expect for Christmas.
This one is easy. You're going to see the cheapest Christmas since 2008. I think we'll average less than $2.50, and I think most people will be able to buy gasoline for between $1.99 and $2.29.
Wow.
The price of diesel dropping 30 to 40 cents, heating oil 75 cents to $1 cheaper than it was last year. Jet fuel prices dropping, but as a frequent flyer, I can tell you, I don't see any benefits from that.
I know, living in the Northeast, I feel like we don't see the benefits of lower gas. It feels like also.
Tom, how much lower do you think the price can go?
Well, I think it will go to that range of $1.99 to $2.29, and then it'll bounce up in the spring, as it always does. After that, OPEC's got a June meeting. I think they'll have to bring it forward a little bit, and they've got a real crisis. This could be the end of OPEC as we know it.
Well, Tom, it's always a pleasure to talk to you, especially when you tell us gas prices are going down as much as they have been.
That's an easy one.
Yes.